All right, Jayakumar joins us now, Prime Securities, to walk us through markets, how he feels about economy, and what his views are on rebooting the entire PSU space. Jakes, before we get into markets, I was reading, my understanding is that you've been making a point across to various stakeholders that how the PSU space can be rebooted. I mean, PSU space needs no introduction, the kind of crunch they are in and the kind of wealth they have destroyed. So what is the whole idea of bonus debentures, which you are, in a sense, very vocally, sharing as with the stakeholders?
Well, good morning, and thank you for having me over. It's true that there are pockets of opportunities which I think can be looked at from a perspective of the government being able to raise fair amount of funds. I say fair amount. I think it's a bit of an understatement, as you'll understand the implications of the size that we're talking about. So just focusing on PSU bonus debentures as a concept. Finally, what is a bonus debenture? Most people would ask. It's a usual practice that the reserves of a company are capitalized, which means you reduce reserves and you issue equity shares, which is the concept of a bonus issue of equity shares. What we are recommending is, we in Prime Securities are talking about capitalizing the reserves and issuing debt as opposed to equity to the stakeholders. So the concept is that you're issuing the underlying company's debt. So if you take a basket of stocks like Container Corporation, ONGC, NTPC, REC, PFC, etc., and you look at many of these are, for starters, many of them are underleveraged companies. Perhaps not PFC, REC, because they've got other, one of them has got debt for what they've acquired. But if you take the underleveraged basket, which includes some of the other names I talked about, and there's a list of 13 companies we've identified, all of them are AAA corporates, and all of them have a headroom for reducing reserves and increasing debt without the rating getting affected. Very, very important. We don't want the corporate rating to get affected. If you add up what we've recommended across these 13 companies, we come to a number of around 2.5 lakh crores, which is a small amount of about $32.5 billion, as in B with a billion with a capital B. $32.5 billion of issuances can happen. So bonus debentures per income tax is treated as a dividend, which means that through a board action followed by an NCLT approval, each of these companies can issue debt without affecting corporate rating and issue approximately 2.5 lakh crores based on the set that we've taken of debt instruments maturing over, say, 8, 9, 10 years and carrying a coupon of maybe 5.5% to 6.5%, maybe 6%. And this basket, by the way, effectively becomes income in the hands of the recipients. As you know, in PSUs, average government holding across each of these is about 60%. So approximately 1.5 lakh crores or $20 billion can become income, which effectively straight away reduces fiscal deficit, or put differently, gives actual cash, because those debentures can be sold off very easily. I'll just come to that in a second. So these recipients, which means lakhs of shareholders for the balance 40%, and 60% being the government of India, are recipients of 2.5 lakh crores of debt instruments of these underlying PSUs. And those instruments, by the way, the next question is, because many of them may want to dispose it off. So there are two avenues of income from a government perspective. One is the direct receipt of 1.5 lakh crores, and the other is the tax of 25% approximately on the balance 1 lakh crores, which is held by retail individuals, mutual funds, FIIs, insurance companies, etc. So approximately 1,75,000 crores or $25 billion can be generated by the government in this fiscal, without touching fiscal deficit, in fact, benefiting, without hammering away trying to sell undervalued PSU equity, which in any case there are limited takers for, as evidenced by their high dividend yields. Without making a fire sale of any of this, you are very efficiently leveraging balance sheets of PSU corporations. And as you know, when you add fair amount of leverage to an under-leveraged balance sheet, the ROE improves. And the interest that they pay, these PSU corporations, are tax deductible. The interest payments are tax deductible over the life of the bond.
Fair point. So, Jakes, all PSUs have a different ROS, different equity profile and a different equity base. So from an ONGC to, let's say, a BEL, from a BML to a NALCO, how will this apply universally?
It doesn't apply universally. That's what I said. You've got to identify, this is a concept. The concept here is that PSUs, many of them have just become instruments that throw out some cash as a result of a near monopoly position that they occupy. But that cash is really not being redeployed. But more importantly, the balance sheets are under-leveraged. Here's a methodology where the government effectively gets these corporations to add some debt, which means you add responsibility and accountability on these balance sheets. The visibility, so the individual boards have to take this call based on their visibility of the income streams over the next several years, 8-10 years. Use a fraction of that to basically load the debt on without affecting corporate rating. Effectively, they are borrowing from the future earnings, paying off to the government, which efficiently, and by the way, any yardstick of fiscal deficit calculation, the government has been talking about a central government deficit. Many people have argued to add on state government deficits and the deficits as a result of other 100% entities of the government. But these being listed non-100% entities, the debt on these will never get added to the balance sheet of the government. So this is a useful way to juice out efficiencies from PSU by doing nothing. I repeat, no regulation change, no tax change, and the recipients who have to pay dividends, have to pay a tax on the receipt of dividends, can technically, imagine lakhs of individuals holding these equity shares suddenly get payouts between 30 and 80% of the market cap in the form of debentures. And where do they go to sell these debentures? Banks have 8 lakh crores. Overseas institutions are hungry for AAA assets, debt assets. Today, the debt market, which the government has been wanting to develop, the RBI has been wanting to develop a corporate debt market since 1985 when I joined Citibank. Till today, nothing has really happened. There is no development of, there's a development of the equity market because there are participants and there's AAA, AA, etc. paper that's available in the equity market. Similarly for corporate debt market. Suddenly you put in 2.5 lakh crores available with individuals who may want to trade. This becomes a deep, liquid, and an extremely efficient alternative to parking money in fixed deposits and for banks to park money in these corporate debt as opposed to RBI at 3.4%. So this is really reassigning the liquidity in the system. And I'm sure if we dig deep, we can do 5 lakh crores worth of bond issuance. Why 2.5 lakh? Even the private sector may actually follow this. The bonus debentures, by the way, a concept that private equity guys world over use. It's called a dividend recapitalization scheme. All they do is they say we're coming into this investment for 6-8 years. But if there are cash build-up that happened in 2-3 years itself, they tell the company, you will leverage yourself up if you have leveraging ability, use the cash, etc., and give us interim payouts. That's one way to accelerate the returns. So this is an international concept, and I personally believe the government could find itself on the front pages of Wall Street Journal and New York Times for just looking at a corporate finance solution to what is a problem that seems absolutely unable, they're unable to solve other than by monetizing the deficit, which they're not keen to do because of various rating reasons. Imagine telling the Reserve Bank of India, you were supposed to monetize 4 lakh crores if you want to spend it. Guess what? We don't need your monetization beyond 50,000 crores. The rest we'll raise through this route. And this is income, by the way. This is not debt. So a smart way of generating income, and what to do with that, I'm not even prescribing it. We're not even being normative about what should happen to this money that they raise. But literally, this entire 1.5-2 lakh crores can be monetized within 3 months. Do a Bharat Bond ETF, and this can go up to everybody. Imagine holding 6% AAA government paper. I think to my mind, it's a very low-hanging fruit. But because it's a corporate finance solution, it's never found, people haven't sort of realized it, if you will. But just to put things in perspective, NTPC has done a bonus debenture issue in 2014 of 10,000 crores. It was never followed up. I think it was a test case done. The other people who've done bonus debentures includes Dr. Reddy's, Britannia, which has done 3 issuances, Hindustan Lever, which has done 1 or 2 issuances, and NTPC. So AAA underleveraged corporates have done it. So why can't we just extend this argument? And the NCLT process, by the way, because it's under the government, effectively they can say that this can be fast-tracked to give 30-day clearances for PSUs, for instance. And if that were to happen, I think between now and March 31, we could be talking about the government wanting to and able to spend 2 lakh crores without depending on anyone, including and especially the RBI.
Fair point. It's a corporate solution rather than an obvious solution where government is hard pressed to sell disinvestment and other proceeds. So, Jakes, for equity investor, what is in store from PSU banks now? Because now they are the really ugly ducklings of the market now. They may be cheap, they may be attractive, they may be trading below intrinsic value, but they only are destroying wealth. So what is in store for equity investors from some of these PSUs now?
So I think there are 2 sides to this. PSU banks will keep requiring capital. I think the only way is maybe converting this to maybe 1 SBI and 3-4 other large, which is what the large banks, which is what the merger seems to be doing. Every other one, I think, needs to be privatized and sold. I mean, very simply put, if the government is indeed keen that there should be no more than 3 players or 4 players in any one space where they are, the others need to be sold out. I mean, we could couch this, mollycoddle this, but the reality is these have to be sold off, number one. As far as other PSUs are concerned, in fact, what I'm suggesting is the only sales of equity they need to do, because this PSU basket is so undervalued, that I think you start increasing payouts through ideas like the PSU debentures and do strategic sales. That's all you need to do. In fact, I foresee that the next big re-rating, if something out of the box were to come through in the government thinking on the PSU space, it is such low-hanging fruit that the basket could get re-rated 40 to 60%. There is no reason why private sector counterparts of these PSUs should be quoting at dividend yields of 1.5%, 2%, and these quoting at 8 to 10%. I mean, it just makes no sense at all.
But Jakes, what would be the relevance of some of these companies? I mean, I may argue back and say that some of the companies which currently are PSUs, they may have a very strong history, but the relevance of some of those companies may just not be there because of competition, because of originality, and because of private sector opening up. So even whether it is debt or equity, ultimately when you're borrowing money or you're investing in equity, the whole importance of relevance now is getting questioned.
Well, I can't disagree with you, except that it's only when you go out to try and sell them, you'll know whether that every company which has a certain relevant position, we can say that maybe the relevance is declined because that's the way they've been managed. But the reality is that they all have some value or the other, in fact, a lot of value if in good hands. Take the case of Hindustan Zinc and Balco, etc. Once you go through a privatization process, valuations dramatically change. So it isn't that people in these companies are not good. I think they've got some top quality personnel. In fact, most of them retire and join private sector players. They've got tremendous franchises that they've built. It's just that the government as a manager has not been able to do it. And I think while it's, we keep quoting these trite phrases like, less government in business and all that. But I think the time has come to sort of walk the talk. And when you sell, you will not get top dollar, but because the person buying it needs that much, incentive to get in. But clearly, money that you raise through selling this, at least A, the hemorrhaging stocks, B, I remember Coal India divestment, I think they started at 290 rupees. And, stocks down to wherever it is, so or maybe even higher. ONGC started at 290, 300, today it's down to 70 rupees. So the valuation obviously has reflected the apathy that investors have had to these, because they know that the supply is persistent, unending, and they just keep continuing. Now, from our perspective, if that money could be released and redeployed elsewhere, I think a lot can happen. And I think we underestimate what that can do to the sentiment in the market, because the secondary market sentiment can dramatically change were some steps like this to be taken. For instance, BPCL and Air India we talked about, we're nowhere close to the finishing line. But the reality is that the market needs these steps to be taken. Now it's no longer whether but when, I guess. But because the weather has been virtually addressed by the government itself, that it's not whether they need to do it. So whichever way I look at it, I think the PSU divestment strategic, and in the interim, adding some value to their holdings through payouts is the way forward.
Okay, so Jake's last question, and then we'll not extend our appointment beyond that. Now, PSU's businesses are largely dominant in three pockets. Commodities, right. You got Nalco, you got Coal India, then you've got really the manufacturing space, whether it is BEL, BHEL, those old big companies, and then you got banks where the relevance only has got reduced over the years. So if you really have to, let's say, bet on one PSU business where you think the relevance and where you think the longevity would be there, which would be that business within the PSU?
State Bank of India. And while because I think at one level, State Bank of India used to be an industry in itself, in a manner of speaking, when I started banking. Today, it's one company, which, by the way, is not standing outside the capital markets waiting to raise equity. Most of its private sector, partners, for one reason or the other, whether it's a case of promoter diluting stake, whether it's a case of recapitalizing for growth, whether it's a case of needing money to shore up losses, COVID provisioning, whatever. Every single private sector bank virtually, maybe with the exception of HDFC, has gone out seeking to raise capital and has raised capital. State Bank of India, nowhere close to it, which means that State Bank of India has actually got the secret sauce correct. They have harnessed tremendous value through the sale of their subsidiaries. The parent stock itself is deeply undervalued. And I think, with sort of the passage of time, whether in terms of digital play, wealth management, whether in the housing sector, every sector, I think you will find a lot more of a more efficient State Bank of India. And quite honestly, even in terms of corporate loans, even in terms of provisions, they've been ahead of the curve. And to my mind, that's a fabulous franchise. And whatever way we look at it, they've got some of the finest, personnel at senior levels that this country has produced in terms of any corporation, because it's been like a private sector in the public sector itself. And I think that's a test case for others to follow. And if there's a disclosure, I'd like to say that I hold
the platform when Paytm is No, thank you for the disclosure, and I just want to bring this point out that with State Bank of India, we have this image of being like a massive elephant which cannot dance. But hats off to them that they've managed to create which is on course to make profit, whereas there are a lot of other platforms like Paytm and others which are nowhere close to an operating profit. So Jakes, let's wrap it up by one more question on State Bank of India, because I'm intrigued with the points which you're raising. The points which you have mentioned, Jakes, all of them in a sense are pointing to deep value for State Bank of India, and including their subsidiaries and the fact that their subsidiaries have gone public. But whatever you've shared and discussed, Jakes, has been relevant from last 3 years. Yet in last 3 years, the stock has only lost perception and price to book and P multiple. Why is there so much of lack of faith?
I think it takes time, and nobody knows when this will happen, because if we knew it, it wouldn't be there. So if there was, this thing sort of flips on a dime, if you will. I think some of the listings of their subsidiaries have been eye-popping. They've been doing extremely well. They've had some of the best tie-ups, whether it's with the GEs or the Carlyles and other private equity players who've been part of their various subsidiaries. The experience has been fabulous. Business creation has been wonderful. When will it turn? I think the last few years, people have been worried about portfolio, and they've come out quarter on quarter saying how well they've addressed the portfolio issues. Banking, by definition, will need capital. This is the first time, I repeat, this is the first time in a 12-month period or 18-month period, the State Bank has come out saying we don't need capital. We do not need capital. And we will do this through our own provisioning. We've got enough wealth in our subsidiaries. which itself, by the way, has not been fully harnessed. And they've gone out and said that there is a certain sanctity and respectability to the, and a certain credibility to the number in terms of book value, etc. And I don't think they're going to go out there and raise equity in a hurry. I think the markets will start recognizing it. Unfortunately, this has come at a time when the entire banking and financial services space has gone through a massive derating in terms of index weights. From up at 40, 42% is down to about 24, 25 perhaps. And that's understandable that in that market, you cannot have one stock bucking the trend. But if there is one stock that I'd like to put my money on, and I have put it as a disclosure, please take that. And I'm no soothsayer to say that it will re-rate tomorrow or in the next 2 quarters, but I get the feeling we're on the cusp of an absolute amazing inflection. And with disclosure standards, with transparency, with the way business is done, digitization, subsidiary valuation, it's a matter of time.
Well, Jakes, really a real pleasure to have you back on ETNA, and thank you for really covering a range of topics on how can one reboot PSUs without really by simply finding a solution or simply finding a corporate fundraising solution. Stay safe, my friend, and thank you for joining us.
Thank you. Thanks for having me over. All the best.